Peter Lynch, the investor who found opportunity everywhere. Opening. Most people believe successful investing begins on Wall Street. Peter Lynch believed it often begins much closer to home. It begins while walking through a shopping mall, eating at a busy restaurant, talking with family, watching what your children suddenly become excited about, driving through your neighborhood, simply paying attention. While millions of investors searched through complicated financial reports hoping to discover the next great company, Peter Lynch noticed something remarkable. Sometimes ordinary people recognized great businesses long before professional analysts did. Not because they possessed secret information, because they lived in the real world. They saw which stores were always crowded. They noticed which products disappeared from the shelves. They watched which companies quietly became part of everyday life. Peter Lynch transformed this simple observation into one of the greatest investing careers in history. During his 13 years managing Fidelity's Magellan Fund, he achieved results that astonished Wall Street. Yet when people asked how he found so many winning investments, his answers often sounded surprisingly ordinary. He encouraged people to observe, to remain curious, to think for themselves, to trust careful research instead of popular opinion. His greatest lesson wasn't about predicting the future. It was about noticing the present, because opportunity often appears quietly, long before everyone else notices it. Chapter 1. Success doesn't always wear a suit. When people imagine legendary investors, they often picture someone surrounded by flashing computer screens, endless charts, and complicated formulas. Peter Lynch challenged that image. He believed that one of the greatest advantages individual investors possess is something professionals often overlook: their everyday life. Professionals spend countless hours studying financial statements. Individual investors spend countless hours using products, shopping, traveling, eating, living. Peter realized these ordinary experiences could become extraordinary sources of insight. Imagine walking into a coffee shop that always has a line out the door, or noticing a clothing brand that suddenly seems to be everywhere, or hearing teenagers talk nonstop about a new product. These observations are not investment decisions, but they may be the beginning of an investment idea. Peter believed the individual investor often sees these changes months or even years before Wall Street fully understands them. The key is not acting immediately. The key is becoming curious. Ask questions. Read the annual reports. Study the business. Understand how it makes money. Curiosity comes first. Investment comes later. Chapter 2. Buy what you understand. One of Peter Lynch's most famous principles has become legendary. Never invest in a business you cannot explain simply. Imagine trying to describe a company to a close friend. Could you explain what it sells? Why customers love it? How it earns profits? What makes it different from competitors? If the answer is no, Peter believed you probably shouldn't invest in it. This sounds simple, but simplicity often requires discipline. Many investors become attracted to businesses they barely understand simply because everyone else seems excited. The company sounds impressive. The technology feels revolutionary. The headlines create excitement. Yet when asked a simple question, how does this business actually make money? They struggle to answer. Peter believed confusion is never an investment strategy. Understanding builds confidence. Confidence builds patience. Patience allows investors to hold through temporary market volatility without becoming emotional. Knowledge becomes an anchor. Without it, every market decline feels terrifying. Chapter 3. Great companies hide in plain sight. Peter Lynch loved to remind investors that many of history's greatest businesses appeared surprisingly ordinary in their early years. They weren't exciting. They weren't glamorous. They simply solved real problems for real people. A supermarket, a pharmacy, a restaurant, a home improvement store, a clothing retailer. These businesses quietly grew while much of Wall Street searched for the next spectacular breakthrough. Peter understood that extraordinary investments often begin as ordinary businesses serving customers exceptionally well. He wasn't searching for excitement. He was searching for excellence. That distinction changed everything. Excitement attracts headlines. Excellence attracts loyal customers, and loyal customers often create extraordinary businesses. This idea remains timeless. The companies that quietly improve people's daily lives often become the companies that quietly reward patient shareholders. The challenge is learning to notice them before the rest of the world does. That requires observation, curiosity, and independent thinking. Exactly the qualities Peter Lynch practiced throughout his remarkable career. Chapter 4. Opportunity is everywhere. Perhaps Peter Lynch's greatest gift was changing the way people looked at the world. He taught investors that opportunities are not hidden behind locked doors on Wall Street. They're all around us. Every shopping trip, every family conversation, every new product, every growing business, every satisfied customer. The world constantly offers clues. Most people simply walk past them. Peter trained himself to notice. He asked questions. He stayed curious. He remained open to learning from ordinary experiences. Because extraordinary investing often begins with ordinary observation. That may be his most powerful lesson of all. Success is not reserved for those with the fastest computers. It belongs to those who notice what others overlook. Sometimes the next great investment isn't discovered inside a financial model. Sometimes it's discovered during an ordinary afternoon in everyday life. Peter Lynch, the investor who found opportunity everywhere. Part 2. Chapter 5. The market is full of noise. Every morning, millions of investors wake up to a flood of information. Breaking news, economic reports, market predictions, analysts raising price targets, experts lowering expectations. Financial television fills the day with opinions about what the market might do next. Peter Lynch looked at this constant stream of noise differently. He believed that far too many investors confused information with wisdom. Just because something is reported every hour does not make it important. Just because everyone is talking about a company does not mean it is a great investment. The market has a remarkable ability to distract people from what truly matters. A stock may fall because of fear. Another may rise because of excitement. But neither emotion changes the quality of the business itself. Peter encouraged investors to separate headlines from reality. Instead of asking, "What did the stock do today?" he preferred to ask, "What is the business doing? Is it growing? Are customers returning? Are profits increasing? Is management making wise decisions?" Those questions matter far more than today's stock price. The market often behaves emotionally. Businesses grow patiently. Learning to recognize that difference gives investors a tremendous advantage. Chapter 6. Patience is an investor's greatest friend. Peter Lynch never believed investing was a race. He believed it was a journey. Many investors buy stock expecting quick profits. When nothing exciting happens after a few weeks, frustration begins to grow. They sell. Then they chase another exciting opportunity. And then another. Years pass. Their portfolio changes constantly, but their wealth barely grows. Peter observed this pattern over and over again. The greatest companies rarely become extraordinary overnight. They grow gradually, store by store, customer by customer, year after year. The same patience required to build a successful business is often required to benefit from owning one. This is why Peter admired investors who could think in years instead of days. Every great company experiences setbacks, temporary disappointments, market corrections, unexpected challenges. But temporary problems are not always permanent problems. The patient investor learns to distinguish between the two. That ability often separates successful investors from emotional ones. Chapter 7. Know what you own. One of Peter Lynch's simplest questions remains one of the most powerful. Why do you own this stock? Surprisingly, many investors cannot answer. They bought because a friend recommended it, because someone on television sounded convincing, because social media became excited, because the chart looked promising. Peter believed every investment should have a clear reason, not an emotional reason, a business reason. If someone asked you today, "Why did you buy this company?" Could you explain it in 1 minute? Could you describe its products, its customers, its strengths, its risks? If not, Peter believed you were relying more on hope than understanding. Knowledge creates confidence. Confidence creates patience, and patience gives great businesses time to reward their owners. Chapter 8. Ignore the crowd. One of the hardest things any investor will ever do is think independently. Crowds create powerful emotions. When everyone around you becomes excited, it feels uncomfortable to remain calm. When panic spreads through the market, it feels almost impossible not to panic too. Peter Lynch understood this perfectly. He knew the crowd often arrives after the biggest opportunity has already passed. By the time every magazine places a company on its cover, by the time every television program discusses it, by the time every conversation centers around the same exciting stock, much of the easy opportunity may already be gone. The same principle works in reverse. When fear dominates every headline, when everyone believes the future is hopeless, history often shows that remarkable businesses continue building value quietly beneath the surface. Peter never suggested blindly doing the opposite of the crowd. Instead, he encouraged investors to think for themselves. Study the facts. Understand the business. Make decisions based on evidence rather than emotion. The market rewards independent thinking far more often than popular opinion. Chapter 9. Great investors stay curious. Curiosity was one of Peter Lynch's greatest strengths. He constantly asked questions. Why are customers shopping here? Why is this business growing? Why are people recommending this product? Why is this company expanding so quickly? Most people notice these things. Peter investigated them. Curiosity transformed ordinary observations into investment research. He never assumed he already knew enough. He remained a student throughout his career. That lesson extends far beyond investing. Curious people continue growing. They continue learning. They continue discovering opportunities others overlook. The moment curiosity disappears, growth begins to slow. Peter Lynch reminds us that successful investing is not simply about numbers. It is about paying attention. It is about observing the world with open eyes and an open mind. Because opportunity rarely announces itself with a loud voice. More often, it quietly waits for someone curious enough to notice it. Peter Lynch, the investor who found opportunity everywhere. Part 3. Chapter 10. The greatest advantage you already have. Imagine competing against the largest investment firms in the world. They have thousands of employees, entire research departments, powerful computers, unlimited financial data. It sounds impossible. Yet Peter Lynch believed the individual investor possesses one advantage that even the largest institutions can never fully duplicate. Freedom. A professional money manager often has to answer to clients every quarter. They must explain every decision. They face pressure to own popular companies because everyone expects them to. An individual investor has no such obligation. You can wait. You can ignore the headlines. You can study one company for months before investing a single dollar. You are free to think independently. Peter believed this freedom was one of the greatest advantages an ordinary investor could ever possess. The challenge was learning to use it. Instead of copying Wall Street, you could quietly observe the world around you. Instead of reacting to every market swing, you could patiently wait for exceptional opportunities. Instead of chasing excitement, you could pursue understanding. Freedom is valuable only when paired with discipline. And disciplined patience often becomes an investor's greatest competitive advantage. Chapter 11. The courage to admit mistakes. One lesson separated Peter Lynch from many investors. He never expected perfection. He understood that mistakes were inevitable. Even the greatest investors buy companies that disappoint. Markets change. Businesses change. Unexpected events occur. The difference is not whether mistakes happen. The difference is how quickly you recognize them. Many investors become emotionally attached to their decisions. Instead of asking, "What has changed?" they ask, "How can I prove I was right?" That question is dangerous. Peter encouraged investors to remain flexible. If new facts appear, accept them. If the original investment thesis no longer exists, move on. Protecting your ego is expensive. Protecting your capital is wise. Every mistake carries tuition. The question is whether you learn from it. A small mistake that teaches a lifelong lesson may become one of the most valuable investments you ever make. Chapter 12. Patience is not doing nothing. Many people misunderstand patience. They imagine sitting quietly and waiting. Peter Lynch viewed patience differently. Patience is active. While waiting, you continue reading. You continue observing. You continue asking questions. You continue studying businesses. You prepare long before opportunity arrives. Think of a farmer. A farmer cannot harvest the day after planting seeds. But that does not mean the farmer is inactive. The soil is cared for. The fields are inspected. Plans are made. Preparation continues every day. Successful investing follows the same rhythm. There are seasons for learning, seasons for waiting, and seasons for acting. Those who confuse waiting with laziness often become impatient. Those who understand preparation discover that patience is one of the hardest forms of work. Peter Lynch knew that successful investors were rarely idle. Even when they made no trades, their minds were constantly learning. Chapter 13. Ordinary people see extraordinary things. Perhaps Peter Lynch's most revolutionary idea was also his simplest. He believed that ordinary people often notice important changes before experts do. A parent notices a toy every child suddenly wants. A restaurant stays crowded every evening. A neighborhood hardware store keeps expanding. A clothing brand quietly becomes popular among young people. These observations may seem small, yet they often reveal something powerful. Real customer demand. Peter never suggested buying a stock simply because you liked a product. Observation was only the beginning. Research came next. He wanted investors to connect everyday experience with careful analysis. Notice first. Study second. Invest only after understanding. This process separated intelligent investing from emotional speculation. The greatest opportunities often appear quietly. Not on television, not in headlines, but in everyday life. The investor who pays attention gains a remarkable advantage over the one who only follows the crowd. Chapter 14. Success is usually boring. Modern investing often celebrates excitement. Rapid gains, breaking news, hot stocks, explosive trends. Peter Lynch saw something very different. Many of history's greatest investments looked surprisingly boring in the beginning. Steady businesses, growing sales, satisfied customers, disciplined management. Year after year, they quietly became stronger. No drama, no headlines, just consistent progress. Peter understood that lasting wealth is usually built the same way, not through constant action, but through patient ownership of excellent businesses. Many investors become distracted because they mistake excitement for opportunity. Peter reminded us that excitement often attracts attention. Consistency creates wealth. This lesson extends far beyond investing. The strongest careers, the happiest families, the healthiest habits are rarely built through dramatic moments. They are built through small, wise decisions repeated over many years. That is how businesses grow. That is how fortunes grow. And perhaps, that is how great lives are built. Peter Lynch, the investor who found opportunity everywhere. Part 4. Chapter 15. The real competition. Many investors spend their lives trying to beat the market. Peter Lynch believed they were fighting the wrong opponent. Your greatest competition is not Wall Street. It is not the hedge fund manager in New York. It is not the analyst with 10 computer monitors. Your greatest competition is the person you see in the mirror every morning. Fear, greed, impatience, overconfidence. These emotions have quietly emptied more investment accounts than recessions ever have. Peter understood that markets change. Human nature does not. When prices rise rapidly, people become convinced they will rise forever. When prices fall sharply, they begin believing they will never recover. History shows that both emotions are usually temporary. The investor who learns to control emotion gains an advantage that no computer algorithm can duplicate, because markets are ultimately driven by people, and people will always experience fear and hope. Learning to manage those emotions is one of the greatest investments you can ever make. Chapter 16. looking beyond the stock price. Every day, the market places a different price on every company. Some days prices rise. Other days they fall. Peter Lynch reminded investors that the business itself changes much more slowly. Imagine owning a small family restaurant. Would you decide whether the restaurant was successful based only on what someone offered to pay for it today? Or would you look at the number of customers, the quality of the food, the loyalty of the staff, the growth in profits? Public companies deserve the same careful thinking. A falling stock price does not automatically mean the business is failing. A rising stock price does not automatically mean the business is thriving. The market's opinion changes every day. The business tells its story over many years. Peter encouraged investors to keep their eyes focused on the business rather than becoming distracted by short-term market movements. That simple shift in perspective can completely change the way an investor experiences volatility. Chapter 17: The Habit of Observation. One reason Peter Lynch consistently discovered opportunities was because observation had become a daily habit. He was always paying attention, not searching desperately, simply noticing which stores were expanding, which products kept selling out, which companies continued improving year after year. Most people walk through life seeing the same things. Peter walked through life asking questions. Curiosity transformed ordinary experiences into valuable research. The wonderful thing about observation is that anyone can practice it. You do not need expensive software. You do not need inside information. You do not need a degree in finance. You simply need the willingness to notice what others ignore. Great investors train their eyes before they train their wallets. Chapter 18: Wealth Grows Quietly. Modern culture celebrates sudden success. The overnight millionaire, the viral entrepreneur, the explosive stock. Peter Lynch knew that reality usually looked different. Real wealth often grows so gradually that it is almost invisible. A company opens one new location, then another. Revenue grows a little each year. Customers return because the product consistently delivers value. Management quietly reinvests profits into future growth. Year after year, the business becomes stronger. Then one day, the world suddenly calls it an overnight success. But the people who watched carefully know the truth. Nothing happened overnight. It was years of steady progress hidden beneath the surface. Investing works much the same way. Compounding rarely feels dramatic while it's happening. Its power becomes visible only after time has done its work. Peter Lynch understood this better than most. He wasn't searching for miracles. He was searching for businesses capable of quietly becoming better every year. And that patience often rewarded him far beyond what excitement ever could. Chapter 19: Opportunity Belongs to the Prepared. People often describe successful investors as lucky. Peter Lynch smiled at that idea. Luck certainly exists, but preparation determines whether you recognize opportunity when it appears. Imagine two people walking past the same business. One sees only another storefront. The other sees a growing company with loyal customers, expanding locations, and strong management. The opportunity was visible to both. Only one person was prepared to recognize it. Preparation comes through reading, studying, observing, thinking, learning from mistakes, building knowledge little by little. Peter spent decades preparing his mind. So when opportunity appeared, he was ready. That is perhaps the greatest lesson of all. Opportunity rarely announces itself. It quietly rewards those who prepared long before it arrived. And that preparation becomes one of the most valuable investments anyone can ever make. Peter Lynch, the investor who found opportunity everywhere. Part 5. Chapter 20. The Biggest Winners Take Time. One of the greatest misunderstandings in investing is the belief that great returns happen quickly. Peter Lynch knew better. When people look back at history's biggest winning stocks, they often saw only the ending. They saw a company whose share price had multiplied many times over. They admired the result, but they overlooked the journey. Before becoming legendary investments, many of these businesses spent years growing quietly. They faced setbacks, economic recessions, competition, market corrections. There were moments when impatient investors gave up and sold. Yet the businesses themselves continued improving. New stores opened. New customers arrived. Profits slowly increased. While the market focused on short-term fluctuations, the companies kept building long-term value. Peter understood that the stock market eventually recognizes businesses that consistently improve. The challenge is having enough patience to remain invested while that process unfolds. Time is often the missing ingredient, not because time alone creates wealth, but because great businesses need time to demonstrate their true potential. Chapter 21. Learn before you earn. Peter Lynch often reminded investors that knowledge compounds just as money does. Every annual report you read, every business you study, every mistake you analyze adds another piece to your understanding. Most people want immediate results. They want the perfect stock, the perfect entry, the perfect prediction. Peter believed those goals missed the bigger picture. Instead of trying to become rich overnight, become a better investor every year. Knowledge compounds. Experience compounds. Discipline compounds. Eventually, those small improvements begin producing extraordinary results. The investor who never stops learning is preparing for opportunities that have not yet appeared. Every book you finish today may help you recognize tomorrow's great business. Every lesson from a previous mistake may protect you from an even larger mistake in the future. Learning is not separate from investing. Learning is investing. Chapter 22. Confidence comes from preparation. Many people mistake confidence for boldness. Peter Lynch viewed confidence differently. True confidence comes from preparation. Imagine owning shares in a company you have studied for months. You understand its products, its customers, its financial statements, its management. Then the market falls by 10%. Would you panic? Probably not, because your confidence is built on understanding. Now imagine buying a company because someone online said it would double next month. The same 10% decline suddenly feels terrifying. Why? Because uncertainty creates fear. Peter believed preparation reduces fear. The better you understand a business, the less likely you are to make emotional decisions during temporary market declines. Confidence is not pretending to know everything. Confidence is knowing enough to remain calm when others become emotional. Chapter 23. Investing is a lifelong journey. Peter Lynch never suggested there was a finish line. There is always another lesson to learn, another industry to understand, another mistake to avoid. Markets evolve, businesses change, technology advances, yet human nature remains remarkably consistent. Fear, greed, patience, curiosity, hope. These emotions continue shaping financial markets generation after generation. That is why timeless investing principles continue surviving decade after decade. Peter Lynch's greatest legacy may not be the extraordinary returns he achieved. It may be the mindset he left behind. Observe carefully. Think independently. Stay curious. Understand what you own. Be patient. Keep learning. Those principles remain just as valuable today as they were when he first shared them. Markets will continue changing. Human nature will not. And for investors willing to study both, opportunity will always exist. Closing reflection. Peter Lynch once showed the investing world that extraordinary opportunities are often hidden inside ordinary life. He reminded us that successful investing is not reserved for Wall Street professionals. It belongs to people who are willing to observe, to think carefully, and to remain patient while others rush. The next great investment may not arrive with headlines or excitement. It may quietly appear in a business you visit every week, a product your family genuinely loves, a company steadily improving year after year while the world pays attention somewhere else. That is the beauty of Peter Lynch's philosophy. He taught us that investing begins not with predictions, but with curiosity, not with excitement, but with understanding, and not with haste, but with patience. Because those who learn to observe the world carefully often discover opportunities long before everyone else finally notices them.